Are you looking to diversify your investment portfolio and protect your wealth from economic uncertainty? Then investing in gold and other precious metals may be a good option for you. We'll take a deep dive into the benefits and risks of investing in gold and other precious metals, and provide some tips on how to get started. In this video, we shall be exposing the following. 1. How to buy physical gold in the form of coins or bars. 2. How to buy shares in a gold mining company. 3. How to purchase a gold exchange-traded fund or ETF. Whether you're a seasoned investor or new to the world of finance, this information will help you make informed decisions about your investment strategy. So sit back, relax, and let's get started on your journey to investing in gold and precious metals.
Welcome to The Strategist.
Investing in gold and precious metals. If you're watching this, you're probably interested in diversifying your investment portfolio and protecting your wealth from economic uncertainty. Investing in gold and other precious metals can be a great way to achieve these goals. But before we get into the details of how to invest in gold and precious metals, let's first talk about why you might want to consider adding these assets to your portfolio in the first place. One of the main reasons people invest in gold is because it is often considered a safe haven asset. This means that it is a good place to park your money during times of economic instability or uncertainty. Gold tends to hold its value well, even when other asset classes are losing value. This is because gold is a physical asset that is not tied to any particular country or economy, and it is not subject to the same risks as stocks or other securities. Another reason people invest in gold is because it is a hedge against inflation. When the cost of goods and services rises, the value of gold tends to increase as well. This is because gold is a limited resource, and as the demand for it grows, so does its price. So, now that you know some of the reasons why people invest in gold, let's talk about the different ways you can invest in this precious metal. Number 1. How to buy physical gold in the form of coins or bars. This allows you to own the metal outright and store it in a secure location, such as a safe deposit box or a home safe. Buying physical gold can be a good option for those who want to have direct control over their assets and prefer the security and peace of mind that comes with owning a tangible asset. Buying physical gold in the form of coins or bars is a direct and tangible way to invest in the metal. It allows you to own the gold outright and store it in a secure location, such as a safe deposit box or a home safe. There are a few different types of gold coins and bars that you can buy, each with its own unique characteristics. Gold coins are typically minted by governments and are legal tender, meaning they can be used as money. Examples of gold coins include the American Gold Eagle, the Canadian Gold Maple Leaf, and the South African Krugerrand. Gold bars, on the other hand, are typically produced by private mints and are not legal tender. They come in a variety of sizes and weights, ranging from 1 gram to 400 ounces. The most common type of gold bar is the London Good Delivery Bar, which is used as a benchmark for the gold industry. When buying physical gold, it's important to consider a few key factors. 1 is the purity of the gold. Most gold coins and bars are made of pure gold, which is 24 carats. However, some gold coins and bars may be made of a lower carat weight, such as 22 carats or 18 carats, which means they contain a small number of other metals in addition to gold. Another factor to consider is the premium you will pay for the gold. The premium is the additional cost you pay on top of the gold spot price, which is the current market price of the metal. The premium can vary depending on a number of factors, such as the type of gold you are buying, the dealer you are buying from, and the market conditions at the time of purchase. It's important to consider the storage and insurance costs associated with owning physical gold. If you plan to store your gold at home, you will need to invest in a secure storage solution, such as a home safe or a safe deposit box. You may also want to consider insuring your gold to protect it against theft or loss. Overall, buying physical gold can be a good option for those who want to have direct control over their assets and prefer the security and peace of mind that comes with owning a tangible asset. However, it's important to do your research and carefully consider the costs and risks associated with this type of investment. Number 2, buying shares in a gold mining company. When you buy shares in a gold mining company, you are essentially buying a piece of the company and its assets. If the company is successful in finding and extracting gold, you will earn a share of the profits. However, investing in gold mining stocks carries its own set of risks, such as the risk of the company not finding enough gold to be profitable, or the risk of the company's management making poor decisions. Investing in gold mining companies can be a way to gain exposure to gold without physically owning the metal. When you buy shares in a gold mining company, you are essentially buying a piece of the company and its assets. If the company is successful in finding and extracting gold, you will earn a share of the profits. There are a few different types of gold mining companies that you can invest in, each with its own unique characteristics. Some gold mining companies focus on exploration and the early stages of development, while others are more focused on producing and selling gold. There are also companies that specialize in different types of gold mining, such as underground mining or open-pit mining. When considering an investment in a gold mining company, it's important to do your due diligence and research the company's track record, management team, and financial health. Some key things to consider include the company's production and reserves, its costs and margins, and its growth prospects. It's also a good idea to diversify your portfolio by investing in a range of different gold mining companies, rather than just one. Investing in gold mining stocks carries its own set of risks, such as the risk of the company not finding enough gold to be profitable, or the risk of the company's management making poor decisions. There's also a chance that gold prices could drop, which would hurt the company's stock price. Investing in gold mining firms might be a method to get exposure to gold and possibly partake in the gains. Before making an investment, you should understand the dangers and conduct some research. Number 3. Purchasing Gold Exchange Traded Fund, or ETF. A gold ETF is a type of investment vehicle that tracks the price of gold. When you buy shares in a gold ETF, you are buying a piece of the fund, and therefore, a piece of the underlying gold assets. Gold ETFs are a convenient way to invest in gold, as they can be bought and sold just like any other stock. A gold exchange traded fund, or ETF, is a type of investment vehicle that tracks the price of gold. When you buy shares in a gold ETF, you are buying a piece of the fund, and therefore, a piece of the underlying gold assets. Gold ETFs are a convenient way to invest in gold, as they can be bought and sold just like any other stock. One of the main benefits of investing in a gold ETF is that it offers a simple and cost-effective way to gain exposure to the gold market. Gold ETFs are diversified, meaning they hold a range of gold assets, such as gold bars, gold coins, and gold mining stocks. This diversification helps to reduce the risk of investing in any one particular asset. Gold ETFs are also highly liquid, meaning they can be bought and sold easily on a stock exchange. This makes them a convenient choice for investors who want to quickly and easily buy or sell their gold holdings. When choosing a gold ETF, it's important to consider a few key factors. One is the expense ratio, which is the annual fee that the fund charges to cover its operating expenses. A lower expense ratio means you will pay less in fees, which can impact your overall returns. It's also a good idea to consider the fund's track record and its holdings, as well as the overall fees and commissions associated with the ETF. Overall, investing in a gold ETF can be a convenient and cost-effective way to gain exposure to the gold market. However, it's important to understand the risks and do your research before making an investment. Investing in any asset carries some level of risk, and it's important to understand the risks and rewards of each investment option before making a decision. Investing in gold and other precious metals can be a good way to diversify your investment portfolio and protect your wealth from economic uncertainty. In times of market turbulence, gold can act as a stable source of value and is frequently viewed as a safe haven asset and an inflation hedge. We appreciate you watching our video on buying gold and other rare metals. We really hope that the information provided has been useful and has improved your awareness of the advantages and hazards associated with investing in these assets. Good luck with your investment endeavors.